LUCID stock is currently trading at 310 and is down significantly from its all-time high set in November 2019. Analysts are saying a one-year projection is going to be a high of $4.50, a low of $1, with a median price of $3.56. Now, because the net income is negative, we can't use EPS compared to the PE ratio to determine a future stock price, but we can use a sales per share and a price per sales ratio. I have here the current share price of 310, our shares outstanding of 2.2 billion, our last 12 months revenue is 595 here, and our projected revenue is going to be 746. We've determined the revenue per share here for the last 12 months is 0.26, and the revenue per share for the next year is 0.32, and that's what we're going to carry over here. So if we take our current price to sales ratio of 12, which we got by dividing the share price divided by this revenue per share, gives you the valuation multiple of 12, we can see that our next year's stock price should be around 3.88. If we see these sales at the same valuation multiple that we see today, which is a 25% increase. Now, what's interesting is the industry average, the auto manufacturer industry average price to sales is only 1.2. And so if we apply that multiple to next year's revenue, we can see a negative 87% drop. According to this multiple, the stock should be sitting at 40 cents. Which is absolutely ridiculous. I don't think that's going to happen. If we go to our competitor average, I've broken it down over here. We have Tesla's multiple of 5.9, NIO's of 1.5, Rivian at 2.9, and BYD at 0.9. And the reason I've starred this is just because this is the Singapore market. This is Chinese stock. And so I've excluded it from the average, but I think it's important to note that it's also really, really low. But we've carried over this average here, which is 3.4. And if we apply that multiple to next year's projected revenue per share, we get a stock price of 1.1, which is a 64% decrease. The S&P 500's multiple is even lower at 2.8, which gives us an 89 cent per share, which is a 71% decrease. The Savvy Analyst best guess, I put 7.9 because, 12 is just ridiculous. If we look at the others, if we look at the industry average, the competitor average, and the S&P 500 average, these are all much, much lower than 12. So I've lowered my price to sales ratio projection. And if we apply that to the forward one-year revenue, I estimate a stock price of $2.56, which is a 17% decrease. And that is the Savvy Analyst best guess.